Hey, it's Chan. Welcome back to Trade the Fear, where we guide beginners to build wealth, one share at a time. If you're returning, you already know the drill. Tesla isn't just a stock for us, it's a core high conviction play. We're not here for hype, we're here for the mission. And the mission is simple. Build your way toward owning 100 shares of Tesla over the next 3 to 5 years, depending on what you can afford. And we do it by buying on pullbacks, not breakouts. We trade through fear, uncertainty, and doubt, because those aren't reasons to run. They're signals to build. And if you're new here, I made a free ebook just for you that breaks down how to start investing with confidence, even if you're starting with only $10. Grab it now at www.get100shares.com and follow along with the strategy that's helping thousands of beginners escape the cycle of confusion and start building real wealth. Let's talk about why Tesla isn't just a stock we watch. It's the backbone of the entire Trade the Fear system. If you've been with us for a while, you already know this. But if you're new here, welcome. You're about to understand why so many smart investors quietly accumulate Tesla while everyone else argues in the comments. Now listen closely. We didn't choose Tesla because it's popular or because it makes headlines. We chose it because it checks every box of long-term disruption. And because if you understand how money flows into the future, Tesla is one of the few companies you simply can't ignore. Tesla is not a car company. It's an ecosystem, a movement, a bet on where the world is going. And if you've ever felt behind in investing, if you've ever looked at a chart and thought, I missed it, let this next part sink in. Tesla sits at the crossroads of 4 unstoppable megatrends. Electric vehicles, EVs, not just cars, but an entire shift in how the world moves. Autonomous driving powered by AI, a future where your car drives itself while you earn back your time. Renewable energy and battery tech, because whoever solves storage wins the future of power. Massive government policy support, trillions in infrastructure spending are already being deployed. And when you zoom out, not just on the chart, but on the entire macro landscape, what you'll see is this. Policy, innovation, and liquidity are all converging into Tesla. This is where the puck is going. We're not the only ones who see it. Cathie Wood knows it. Tom Lee has hinted at it. Elon Musk is living it. But here's where it gets interesting. Even with all this momentum, Tesla will still drop in price from time to time. Why? Because fear, uncertainty, and doubt, what we call the noise, always shakes out the weak hands. And that's exactly when we step in. Our strategy isn't built on hype or guessing what Tesla will do tomorrow. We don't chase green candles. We don't panic at red days. We build wealth the same way empires are built. Quietly, patiently, share by share. So when the crowd panics, we don't. When they sell, we buy. Because we understand the mission. We're building toward 100 shares of Tesla over 3 to 5 years. And we're doing it based on what we can realistically afford. No pressure, no FOMO, just consistent progress. You don't need to be perfect. You just need a plan that makes sense and the courage to stick to it. That's why we only buy Tesla during fear. Not during hype, not during euphoria, but during dips. Because that's when Tesla is on sale. So now that you know the why, let's break down the how. We're going to walk you through the exact chart setup we're seeing right now and what it's telling us about the next 3 to 6 days. We'll cover the multi-RSI signals, volume composition, support levels, and how institutions quietly load during the chaos. Because you're not here to guess anymore, you're here to grow. And together, one share at a time, that's exactly what we're going to do. Alright, let's analyze the current Tesla 4-hour chart using the full trade, the fear system. This is where our edge begins. 1. Multi-RSI, Relative Strength Index. What it is. RSI tells us how overbought or oversold a stock is. In the trade, the fear system, we use multi-time frame RSI. It looks across multiple periods to see where the real pressure lies. Current status. RSI is sitting at 41.3 and falling. What we want, we don't buy yet. Our primary trigger is when RSI drops below 30, then curls back up through 30. That's when the fear hits a peak. And historically, that's when high probability bounces begin. Trade plan. Wait for RSI to hit 30 or below. Don't buy yet. Wait for the curl up confirmation. 2. Low S channel. What it is. This is a dynamic price channel that smooths out noise using regression, kind of like Bollinger Bands, but smarter. It shows where smart money buys and sells based on statistical edges. Current status. Price is pulling back toward the middle of the channel, but hasn't yet touched or wicked below the lower band. What we want, a wick below the lower band, followed by a candle closed back inside. That's often where institutions make their silent entries, shaking out weak hands, then loading up. Trade plan, set alerts just under the lowest lower band. Wait for that wick plus recover setup. That's our confirmation number 1. 3. Volume composition, smart money signal. What it is. This shows the ratio of green, buying versus red, selling volume. Anything above 65% green means institutions are stepping in. Current status, recent candles show low, yellow volume, meaning uncertain behavior, not real accumulation yet. What we want, on the bounce, we want a volume spike, with 65% plus green volume. That's confirmation number 2. Trade plan. If we get a wick below lowest, plus RSI curling, then we wait for volume to confirm before entering large. No green volume, we hold back or DCA small. 4th Wyckoff phases. Market cycle lens. What it is. This helps us track if we're in accumulation, markup, distribution, or markdown. Current phase. We are exiting distribution and likely entering the early part of reaccumulation. A spring setup may form soon. What we want the spring. A sharp drop below support, followed by a powerful bounce that confirms institutions are back. Trade plan. Identify major support at $322. If we dip that low and bounce hard, that's our strongest confirmation. Let's zoom out, because charts mean nothing without context. And right now, the macro landscape is shifting in Tesla's favor. This is where most beginner traders get lost. They stare at charts, draw lines, and hope the next candle goes in their direction, but they forget the bigger picture. Price moves because of money, and money moves because of macro conditions. So if you want to stay ahead of the market, especially as a long-term investor building toward 100 shares of Tesla, you have to understand what's going on beneath the surface. And right now, the signals are flashing green. The Fed is done hiking. For nearly 2 years, rate hikes were the enemy of growth stocks, but that era is over. The Federal Reserve has hit pause, and that pause brings one thing Wall Street craves: certainty. And when the Fed stops tightening, big money starts to shift back into stocks with long-term upside. Like Tesla, inflation is easing. Yes, prices are still elevated, but the key trend is this: inflation is cooling, not climbing. The lower it goes, the more breathing room the market has. It also opens the door to future rate cuts, which is rocket fuel for innovative companies. Liquidity is rising. More liquidity means more cash flowing through the system. And when liquidity rises, investors don't just park it in safe assets, they start hunting for growth. We're seeing signs of that already. Capital is rotating back into disruptive sectors like AI, EVs, and energy tech. AI and EVs are getting capital again. Remember when everyone said innovation was dead in 2022? They were wrong. Now VC firms, institutions, and even governments are pouring billions into the very sectors Tesla dominates. And here's what that all adds up to: a perfect storm of easing pressure and rising opportunity, all flowing into companies like Tesla. That's exactly why top strategists like Tom Lee are predicting a powerful second half rally. They're looking at these same drivers: inflation, rates, liquidity, sector flows, and saying, this is the window to go risk on again. And when the market pivots toward growth, Tesla is often first in line. So while others are distracted by headlines or short-term noise, we zoom out, we see the setup, and we prepare to act. Because Tesla isn't just a stock, it's the epicenter of everything the future is moving toward. So now that we understand the big picture, the macro tailwinds, the liquidity shift, and why Tesla is still where the puck is going, let's bring it back to the short term. What's most likely to play out in the next 3 to 6 days? Well, based on our indicators, we're looking at 2 clear scenarios, one bullish, one bearish. Let's break them down. Scenario A, bullish reversal. This is what we want to see if the setup turns in our favor. The RSI drops below 30, then curls back upward. That's our first signal of momentum returning. Price wicks below the lowest channel, then re-enters the zone, a sign that institutions may be quietly accumulating. Volume spikes above 65% green, confirming that smart money is stepping in. If all 3 triggers align, we're targeting $355 short-term, $370 as momentum builds, and a macro target of $388 to $410 over the next 2 to 3 months if the trend holds and volume supports it. But that's only if the indicators align. Scenario B, trap and breakdown. Here's what to watch for if things start to unravel instead. The RSI dips but fails to curl, no strength coming. And price bounces weakly but gets rejected by the lowest channel. Volume stays low, especially if green volume is under 50%. If this happens, we're likely heading lower. Watch for $322 as a key support zone, and potentially even $300 if selling accelerates. This isn't a time to panic, it's a time to be strategic. Our move, the trade, the fear plan. No matter which path the market takes, we stay ready with a clear plan. Start dollar cost averaging at $340, add more confidently around $330. And if we see a bounce or confirmation at $322, that's where we go heavier, with conviction. But always remember, volume confirms conviction. If the volume doesn't show up, if the RSI stays flat, tighten your stops. Protect your capital. Let the trade come to you. The emotional trap most traders fall into. And here's where so many beginners mess up. Tesla might bounce. It might even look convincing for a moment. But if there's no volume confirmation, if RSI doesn't curl, that's a bull trap. And if you chase that trap, you're buying high and setting yourself up to sell in panic when it pulls back. Don't do that. Don't trade the hype. Don't follow the noise. Trade the fear. Wait for confirmation. Stick to the system and move only when the setup is clear. If this helped you, if this gave you more clarity or helped you see Tesla in a whole new way, then do one quick thing to help us keep this mission growing. Smash that like button. It tells YouTube this is valuable. Subscribe, because we're building this together, one share at a time. Share this with someone confused about Tesla right now, and drop a comment below. Where do you think Tesla is headed in the next 90 days? Do you agree with this plan, or do you see something we missed? I'm Chan, and this is Trade the Fear, guiding beginners to build wealth, one share at a time.